Hello, welcome to Unit 3, Part 2, if I am correct. Today we'll be continuing encumbrances on real property and going more into not the encumbrances portion, because we've already kind of talked about that. We're going to be talking about property taxation, right? So, learning objection is to explain property taxation and procedures and how real property is assessed and taxed. Let's write this property taxation. And we'll be going through this pretty quickly because most of it is going to be just talking about the definition, examples, and then some pictures, and then probably a video. So, the ownership. Okay. Just do this right here. The ownership of real estate is subject to certain government powers, right? One of the powers is the right of state and local governments to impose tax liens for the support of their governmental functions. Oopsie. Because the location of real estate is permanently fixed, the government can levy property taxes with a high degree of certainty that the taxes will be collected. Furthermore, because the lien for property tax levied on real estate has priority over other previously recorded liens in most states, the property tax lien will almost always be the first lien to be paid from the proceeds of a court ordered sale of the real estate. We are actually looking about purchasing a court ordered sale soon with an upset bid period. And I can assure you that because property taxes are rolling out for the county that we're in, a property tax lien will take priority at the end of the sale. In North Carolina, property tax will have priority over all previously recorded liens except the previously recorded state income tax lien. Real estate property taxes fall into two categories, right? So you have your general real estate, and then your special assessment. What is it? A special. I wish you could highlight because I'd like to see where I'm writing at the time. Or improvement. I mean, you can do that without having to let them copy. That's fine. Special assessment or improvement, property taxes. Both of the property taxes are levied against specific parcels of the property and automatically become liens. So, property taxation. So, general tax. Ad valorem tax. General real estate property tax are levied for the general support of the government agencies authorized to impose the levy. Property taxes are known as ad valorem taxes because the amount of taxes varies in accordance with the value of the property being taxed. So, North Carolina property subject to taxation. All real property in North Carolina is subject to taxation. Although counties and municipalities determine real estate property taxes within their jurisdictions, the Machinery Act regulates standards for property taxation. What is the Machinery Act? Oh. Regulates standards for property tax assessment, standards for property tax appraisal, and requirements for tax exempt status. Property generally considered tax exempt or eligible for special tax treatment includes that owned by nonprofit, religious, educational, charitable organizations, property owned by elderly and handicapped, agricultural, horticultural, forest lands, and some property with energy efficient heating and cooling. Property owned by elderly or handicapped can be tax exempt. That's interesting. Real estate is valued for property tax purposes by county or township assessors or appraisers. The official validation is called assessment. Um, Properties assessed value is generally based on the sales prices of comparable properties, although practices may vary. Land values may be assessed separately from buildings or other improvements. Process of arriving at a real estate property tax rate begins with the adoption of a budget by each taxing district. Each budget covers the financial requirements of taxing body for the coming fiscal year. The fiscal year may be the January through December calendar year. Huh. Total monies. I like that word. Taxation timetable. I read this. I was just reading it quietly. Every time I talk, I bruised my tongue a little bit. I was in swimming, and then the board came and hit my chin, and I bit my tongue. Plus, I'm a little sick. Plus, I have a cut in my mouth. So, talking is just not the move. So, there's going to be a lot of quiet moments. I'm gonna try to negate them as much as I can, but I can't promise anything. Taxation timetable. In North Carolina, in January of each tax year, all taxable real property must be listed in the county in which it is located. All listed property is assessed at its fair market value. Real property is appraised based on the statutory schedule and then is reappraised every 8 years. Process referred to as octennial reappraisal. Huh. Each county or municipality determines the appropriate tax rate every year as part of its budgeting process. The rate is calculated by dividing the total amount of revenue needed by the total assessed value of all property in the county. What? Tax rate is calculated by the total amount of revenue that they need? What? Wait, this is wild. Hold on. Uh, Wait. They lost me right here. Oh, wait. Do that again. Because this part got lost. It's $2. So if you have a so if you have a $300,000 home divided by 100 times 2. Hmm, Jeez. Okay. So they just be assessing our value like it's nothing, huh? Appraisal versus assessment. Oh, I'd like to see this. The appraisal of a property defined by a processor an opinion as to value of a property and how that is communicated. Assessment is a visual evaluation of the property for the purpose of establishing assessed value for tax purposes. Even though similar concept, the techniques used in appraisal and assessment are quite different. Tax assessors do not have the time to assess individual properties like appraisers for reasons such as loan applications. In the assessment process, one method is used as a mass appraisal technique that determines the assessed value for all lands in a given area by applying an overall percentage increase or decrease. All right. Hmm. Okay, let me take this exam real quick. Okay, now we'll be going into the math. I love math. Let's do math. Oh, wait. Well, this is kind of unfair. Hold on. I need a wait. Where's my calculator? Go get my calculator. Where's the calculator? Is it in here? I forgot where I put my calculator. Is it up here? It's not a cheap calculator. It's the TI-84. It's one of the Mac Daddy ones. Hold on. I found it. I found it, but it needs batteries. Let me grab some batteries real quick. It looks like I don't have a lot, but we will work it out. I always love using a physical calculator, especially the TI-83. I said TI-84, but it's not. Let's see here. Let's remove this one. I'm gonna be right back when I find out. Okay, I'm back. Now I know that this says it right here in front of me, but seeing is a lot less effective than doing. So I'm gonna be doing all of these in my calculator. So 160,000, right? At a tax rate of 3% or 30 mils will be, so you would obviously multiply that by 0.03, $4,800, okay? So the computation with the equalization factor of 120% will be, huh. This is equalization factors are needed in situations where the county property taxes are being collected from several different towns that are using different assessment ratios. If an equalization factor, a number by which the assessed value of a property is multiplied to arrive at a value the property is that is in line with the statewide tax assessment is used. If they're like, oh, we need 120%, will be 5760. 120% will be 5,760. Oh, so they need 5,760 from that. So they need to get to whatever the number that may be. So 160,000 times 1.2. And then you multiply that by whatever the tax rate is. It'll give you the number. Okay. Cool. Formulas. I freaking love math. Let's get straight to it. So, your annual taxes on a property equals tax rate times assessed value. Now, how do you get your assessed value? Well, first you got to figure out how to spell assessed. So, but your assessed value will equal your annual taxes divided by slash, not the division symbol, divided by tax rate. And your tax rate is your annual taxes divided by assessed value. What if you don't have one of them? You can't get the other. Gladly, the tax rate is usually so. Example number one: if the tax rate is 1.67 per $100 and the assessed value is 120,000. Okay, I'm not gonna look at the answer. 120 times well, our tax rate would be 0.0167. Oh, it's times, not divided. Oopsie. 0.0167. 2004. Yeah, let's get straight to it. 1,800 and the assessed value is 110. So annual taxes and assessed value. So 1,800 divided by 110,000. Times 100. Yeah, because you got to get it to a round number. So 1.63. Oh. 1.63. Oh, if you're rounding it to the nearest second decimal. Okay. Tax rate's 1.20 over 100. Taxes are 1,200. So that would be that our tax rate and our annual taxes. So that would be annual taxes divided by our tax rate would be 0.012. 100,000. 100,000. Wow. One thousandth is going to be in some states tax rate in millis. Well, how do you get or one thousandth of a dollar? So 20 for hold on. Bruh. Hmm. So move the decimal space over 3 times with milli. So if your thing is right here, let me pull out Paint. If you have oops, if you have 24.5, right? You move your decimal space over 1, 2, 3. And essentially it would be 0.0245. And that's what your tax rate would be if you move it decimals to the left. That's what that looks like. Now, if we have what I'd like to say, so you could test it here if we go into the calculator and we do 125,000 times 0.0245, you'll get your annual tax rate. So 125, this is, I don't know why they did that, but anyways, I think I'm right. Anyways, you have a property taxation timetable. When it comes to multiple, right? If a city has an annual budget of 705,600 and a property is just within jurisdiction of 78.5, tax rate would be that divided by that. So I'm not gonna look at the answer though. I'm gonna try to do this on my own before I have to do that. Okay, let's try to. Yep. Okay. Cool. I didn't look at it. So we do. So we take the budget that's necessary, and then divide that by the assessed value. Let me make sure my zeros are right. There's 2 at the end and 3 at the end. Okay. That'll give us 0.009 per 100 evaluation. So you would so your tax rate would be 0.9. Yeah, so 90,000. 90,000 times 0.9. No. 90,000 times 0.09? No. 90,000 times 0.009. So you do 100 times 0.9. So you take 90,000 divided by 100 times 0.9. So you would get. I don't like that. I mean, the thing is, when it's confusing from a math perspective because it's inefficient. And the reason I'm going to say it's inefficient is because you're adding stuff, right? Look at this. Hold on. I'm going to yap for a minute. If you got 90, if you got 90 per, hold on. Okay. How do I just fully clear it? How do I what? Okay, delete. If I have 90, okay. If I oh, I don't want you. If I have 9, what was it? Okay. If my tax rate's 0.9 time for every 100, what does that give me? What does that give me right there? Right? What does that give me? Huh? 0.9 divided by 100. 0.009 times 91,819. Wait, how did it get so high? Wait, what? Oh. 0.009 times 90,810. You don't need to do all that. Just do this. Just forget about how do I draw on the screen? I want to draw. Can I draw? Like I was saying, right? Forget about this, right? Just do this. Just do that, right? If you want to do that, just do this. Cuz this is just 0.9 divided by 100, which is going to equal 0.009. And when you take this 90, oopsie, when you take 90,000 and you do your thing, you're gonna get a really interesting number. You take wait, huh? Huh? Ew. Oh my goodness, what is happening? Trash. When you take 90,000 and then you divide that by point. No. You don't multiply. You don't divide, you multiply. That's quicker. That's a lot quicker. Do that instead. That's just me. I got beef with people. Anyways. Yeah, and then same thing here. I'm gonna do it real quick. 90,000 times 0.008, 720. Just move the decimal 2 times to the left because you have 2 zeros. Each year tax is legally due on a payable. I've spent so much time on math. Payable September 1st, however, because interest does not begin occurring until early in January. The following year, most people pay their real property taxes in late December. The last day that current real property can be paid without penalty is January 5th the following year. So if the tax lien is filed, last year's tax must be paid that 5th. And then taxable property listed, new tax rate is set, tax bill mailed, tax due payable, end of tax year. Ooh, yes. I don't want to see this. Hold on. Hold up. Wait a minute. Hold up. Give me that pen. I'd like to get the pen. I do not want to see any of this. I don't want to see any of this. Matter of fact, oopsie. A little bit too big there. I'm still getting the hang of this. There. Okay. So assume that a property lives on paved street. City is petitioned to pave a street, agrees to do so. Paving is 24 per foot front foot, and the city is to pay 30% of the cost. The homeowner's loan for what would be a special assessment for street paving? Okay. The first steps I would take is I'm going to first determine how much the total cost is. So $24, right, per foot, and the front lot is 100. So that equals $2,400. So we have that. Um, Let me write this down. I'm gonna write example one. So we have 24 per foot, and then we have 100 feet of lot frontage that we need to pave. So 100 times 24 equals 2,400. And if the city is going to pay 30% of that, we would multiply that by 0.3. 2,400 so we would end up paying 720, or the city would end up paying $720. The street has two sides on the property. Wait, I'm confused. Is there a next step? 840? Wait, what? Oh, no, no, no. Okay, hold on. I just realized we're not doing that because he's the one being taxed. Sorry, I thought we were going to determine how much the city was going to pay. So if he's going to pay, that means we do 70 minus 30, which is, or 100 minus 30, which is 70, which is 0.7. So we do 2,400 times 0.7, which gives us 1,680. And if there's two sides of the property, we would divide that by 2. So 840 is what each side would get taxed. And I know I already saw the answer, but I knew how to get there. I didn't see this part right here. Okay. Oopsie. Oopsie. Okay. Can I just go back to number 6? I'm gonna do this and then I'll be right back. I want to record this question really quickly. Um, so this question right here says a home market value. So we have a value. I like to write all my information down because sometimes you can kind of just figure out which formula to use. We have a value of 190K market. Okay. And then we have a city value. So this is what they assess it at. Is 80% of the market value. So we'll take 190, multiply that by 0.8, and we get $152,000. The county tax rate last year was 0.75 per 100. So that would put our tax rate at 0.0075. So tax rate, county equals 0.0075, and then city was 0.0085. But I would do 0.75 plus 0.85 and then multiply that. No, actually, I'd take 1.6 is what would be the answer. Divide that by 100, and that would give you 0.016. And then you would take the 152 grand, multiply that by 0.016. You would get this number right here. That's what your answer would be. I hope me talking through the process was easy. A lot of the times the math is probably going to be the best part in a whole exam, because really all you got to do is just memorize the formulas, which is not that many. From what we just saw, there's not a lot. And just in those three math formulas, it's three math formulas that you can use to pretty much assess the total tax bill for a property. Yes. So I want to go through this one too. This is my first time seeing it. So this one says, what is the assessed value? So remember, assessed value equals annual taxes over tax rate. So assessed value equals annual taxes over tax rate. So AV equals AT over TR. So assessed value, right? So we want to find out the tax value. So we need our annual taxes is 1,600, and our tax rate. Ooh, okay. So this is going to be, I'm going to do 0.8 plus 0.5 equals 1.3 divided by, divided by 100. You get 0.013. So that's your rate. And now we'll see. So we get, when we do that, when you do 1,600 divided by 0.013, you get $123,000 and 76 cents, or 123,076.92, which when we round up will equal 123,077, which is this one. Yes. Next question number 13 is going to be, a property is assessed at 64,410. The county rate is 8.9 millis per dollar. Remember, we move the decimal 3 times. So it's going to equal 0.0089. So it would be 64,410 times 0.0089, which then equals 573.2, which equals just 573 when you round up or down in this case. Okay. The next one here is going to be, properties appraised at 129,000, and if it's assessed at 75% of the appraised value, that would mean you take 129,000, multiply that by 0.75, you get 96,750. I don't like doing the whole, I like to put everything in decimals. Decimals make your formulas easier to remember, because most of the time you're going to be doing multiplication if you just turn your things into decimals. If you don't, you're going to be doing a lot more work. Just turn it into a decimal. Just do it. Get in the idea of looking at a percentage and saying, oh, 0.0 or 0.01 is 1%, 0.05 is 5%, 0.1 is 10%, things like that. When you get in the idea of that, you're going to be doing so much better. And the answer to this one was 96,750. If you recently paid $2,000 in annual property and your assessed value is 183,000, what's the tax rate? So tax rate here, so TR equals what? It equals AT over AV. To remember, your assessed value equals your assessed tax rate, your annual tax over your tax rate. And your tax rate equals your annual tax over your assessed value. So we would take our annual tax, which is $2,000, and we divide that by $183,500. And that is going to give us 183,500, um, which is going to equal, we multiply that by 100 after, 1.09 per $100. The ad valorem. Okay, back to the normal stuff. So I'm looking at the ones I got wrong right now, and I'm realizing right here in the one that I did this one, I think I didn't do this one in my. I did this one on my calculator, and that's probably why I didn't write down everything to realize which formula I needed to use. So I know what issue I did there, but it does make sense when you do have 2,200 times your square footage, you're gonna get. This is number 10. And I'm going through this with you guys because I want to show you the mistakes I made. So we have a 2,200 square foot home, right? And you multiply that by $92 per square foot, you get $202,400, and you're only going to be able to be assessed on that per 100. But if you want to do this in an interesting way, what we'll do is, so what I did before was when you have to add the city and the county, right? You have to do 0.64 plus 0.63, okay? And what you get is you get this 1.27 tax rate. You have to divide that by 100, which gives you 0.0127, which is what I got. So when you multiply that, 0.63 plus 0.64 equals 1.27 divided by 100 equals 0.0127. And then when you bring that down, equals times 0.0127. You multiply that, you get 25.70 and 48 cents. And then that's per year. But if you want per month, that is going to equal 2570.48 divided by 12, which equals $214.21, which is the answer right there. I just did a boo-boo. In this one, I had to read the question right because I didn't account for the 10% increase. And this one was the same issue. I didn't account for the monthly payment. And then over here, I accidentally, oopsie. I accidentally didn't account for how an assessed value of a property must equal. And it's kind of weird because the assessed value is different from your appraised value. And assessed value is going to be done through like comps and stuff like that. But your appraised value is going to be done by an appraisal. So I didn't, it was a mistake. Assessed value is equal to market value for property tax purposes. But other than that, I got an 80 and I'm happy with it. And we're going to move on to the next portion. Well, I'm going to go ahead and leave that here then. Unit 4 is the next portion. And I'm going to go ahead and end the video here. I hope we get to do more like math because I actually really enjoy the math. It's probably the most engaging part. It's only because the rest of it's really just memorizing. And it truly is just kind of cumbersome. So you get it? Encumbrances. Okay, I've been doing too much studying. I'm gonna go now. I hope you guys have a good day. Stay tuned for the next video, and hopefully I'll have my book by then. I ordered the book for the real estate property, or it's called like Modern Real Estate Practice in North Carolina, and it is the 10th version. Amazon has it, so I got it from here, and it should be Neat. But yes, thank you guys all for watching. I hope to see you guys in the next video. Bye-bye.